Okay, so you're looking to get up to speed fast on solar tax credits, maybe figure out if you can save some money going solar. We hear you. Let's just dive straight into the big one for homeowners. That's the Federal Solar Investment Tax Credit, or ITC.
Exactly. We've basically pulled together the key stuff from the U.S. Department of Energy. Their guides for homeowners, even some video transcripts. The idea is just to give you a clear, straightforward look at this credit.
Right.
Our goal here is pretty simple. Make sure you have the essential info on, who's eligible, what the benefits are, how the whole process works. Basically a shortcut so you feel informed without digging around for hours.
Okay, let's start at the beginning then. What is this Federal Solar Tax Credit exactly?
Well, think of it like this. It's a direct reduction in the federal income tax you owe, dollar for dollar.
Ah, okay. Not a deduction, a credit.
Precisely. So say you get a $5,000 credit. Your actual tax bill drops by that full $5,000. It's a direct saving.
Got it. And this is for, like, the solar panels you see on people's roofs?
Yeah, exactly. It's for a percentage of the cost of a solar photovoltaic system. PV system, that's the common term. That's the tech that turns sunlight into electricity.
Right.
And this specific credit we're talking about is for systems you buy and install at your main home here in the U.S.
Okay. So primary residence.
Mostly,
Yeah.
yes. And while there are other credits out there for green energy, today we're really just focused on this homeowner solar PV credit.
Now, I know this credit has changed over time. There was a big update recently, wasn't there?
Yes, that's really important. The Inflation Reduction Act, back in August 2022, it gave the ITC a major boost. So for any system installed between 2022 and 2032, the credit is 30%.
30%. That's quite significant.
It really is. 30% of the total system costs back as a credit. That's a pretty strong incentive for the next, well, decade or so.
Okay, but what happens after 2032? Does it just vanish?
Good question. It actually steps down. So systems installed in 2033, the credit drops to 26%. Then in 2034, it goes down again to 22%. And as things stand right now, the plan is for it to expire completely starting in 2035.
Right.
Unless, Congress decides to renew it.
Right, which can happen. So the takeaway is acting sooner gives you a bigger credit.
Definitely. If you're thinking about solar, the timing matters for maximizing that tax benefit.
And what about just before that 2022 change? What was the rate then?
Yeah. For systems installed in 2020 and 2021, the credit was 26%. And actually before that, leading up to the end of 2019, it was also at 30%. It's bounced around a bit.
Interesting.
And one really key thing, there's no maximum dollar amount you can claim. It's just that percentage, 30% right now, of your eligible costs, however high they might be.
No cap. That's good for larger systems. Okay, so let's get into who can actually claim this. What are the main requirements for a homeowner?
Right. Eligibility. There are a few critical points. First, the system has to be installed between January 1st, 2017 and that end date, December 31st, 2034.
Got that day range.
Second, it needs to be at your primary residence in the U.S. That's where you live most of the time.
Okay, and what about actually owning the system?
Crucial point. You must own the system. That means you bought it with cash or you financed it. If you're just leasing panels, or you have a power purchase agreement where you just buy the electricity from a company that owns the panels on your roof.
Then you don't qualify for this credit.
Exactly. You're not the owner in those cases.
What about community solar? That seems to be growing. Can you get the credit for that?
Community solar. It's possible, but there's a specific condition. You can potentially be eligible if you sort of buy a share or portion of an off-site community solar project.
Okay.
But the electricity generated has to be credited directly against your home's electricity consumption on your utility bill. And the credits can't be more than you actually use.
So just subscribing isn't enough. It has to directly offset your bill.
Precisely. It's tied to your own energy use.
Okay, that clarifies that. What if you don't own a typical house? Like maybe you live in a condo or a co-op?
Yeah, you might still qualify. If you're a tenant stockholder in a co-op or a condo owner, and you contribute to the cost of a shared solar system for the building, then you can claim the credit based on your share of the cost, what you personally paid into it. Renters, though, are out of luck since they don't own anything.
Makes sense. What about vacation homes, second homes?
Interestingly, yes. If you install solar on a vacation home you own in the U.S., you can claim the credit for that system, too.
Oh, really? Not just primary residence?
For this credit, a second home you own works. But just be clear, it doesn't apply to a rental property you own but don't live in. That might fall under different business credit rules.
Got it. So primary home or a U.S. vacation home you own, what if you're off-grid? Does the system need to be connected to the utility?
Nope, doesn't matter. As long as the system is generating electricity for your residence, being off-grid is fine. You still qualify.
And do the panels have to be physically on the roof?
No, they don't. If you have a ground-mounted system, say, in your yard, that's totally fine too, as long as it's on your property and serving your home.
Okay. One last eligibility scenario. The home office, lots of people work from home now. How does that affect the credit?
Yeah, that's a common question. It can get a little tricky. If you use your home for business, the IRS looks at the primary use. If the home is used mostly for living, say, more than 50% residential use, you can usually claim the full credit for the solar system serving the whole house.
Okay.
But if the business use is, really significant, you might have to allocate the cost. You might only get a portion of the residential credit, or maybe part falls under business rules. The key is, does the solar primarily serve the home part?
Okay, that makes sense. Focus on the primary use, so we know who might be eligible. Now, when you're adding up the cost to figure out that 30% credit, what exactly counts?
Good question. It covers a fair bit. Obviously, the solar panels themselves, the PV panels themselves. It even includes panels that might be used for, say, a solar attic fan, but not the fan unit itself, just the solar part.
Okay, just the panels. What about getting it all set up, the labor?
Absolutely. Contractor labor costs are included. That's for the site prep, assembly, the actual original installation, plus things like getting permits, inspections fees, even developer fees if you went through a big installer. All that counts.
And the other hardware, besides the panels?
Yes, what they call the balance of system equipment. That's your wiring, the inverters, the boxes that change the DC power to AC for your house,
Right.
the mounting equipment, the racks that hold the panels, all included.
Okay.
And here's a really big one now, energy storage, batteries.
Ah, yeah. Batteries are getting popular for backup.
Exactly. If you install a battery with the capacity of 3 kilowatt hours or more, the cost of that battery is also eligible for the credit.
Even if you add it later.
Yes, even if you install the battery in a tax year after you install the solar panels,
Yeah.
as long as it meets those general installation date rules we talked about earlier.
And 3 kilowatt hours, is that a decent size?
Yeah, 3 kilowatt is generally considered enough to back up essential things, fridge, lights, maybe some outlets for a few hours during an outage. So it's a practical threshold.
That's great flexibility, adding storage later and still getting the credit. Anything else included in the cost?
Just one more thing, sales tax. Any sales tax you paid on those eligible expenses, the panels, the labor, the battery, etc., you can add that into your total system cost before calculating the credit.
Okay, so that covers the eligible costs pretty well. Now, this often comes up. What if you get other incentives, like a rebate from your utility or maybe something from the state? How do those interact with this federal credit?
Right. This is super important because it's not all treated the same. Let's take utility rebates first. So if your electric company gives you a cash rebate for installing solar, that rebate is generally not considered taxable income. That's the good news. But you have to subtract the amount of that utility rebate from your total system cost before you calculate your 30% federal tax credit.
Ah, okay. So it reduces the base for the federal credit. Can you walk through a quick example?
Sure. Let's say your system costs $20,000 to install in 2023. Your utility gives you a $2,000 rebate. First, you reduce the cost. $20,000 minus $2,000 is $18,000.
Right.
Then your federal tax credit is 30% of that $18,000, so $5,400.
Okay, so the utility rebate lowered the federal credit slightly. What if that $2,000 came from the state government instead?
Now that's different. Rebates from a state government specifically for solar are generally not subtracted from your cost basis for the federal credit.
Oh.
So same $20,000 system, but now you get a $2,000 rebate from the state. You still calculate your federal credit on the full $20,000. So 30% of $20,000 is $6,000.
Wow, okay. That's a $600 difference in the federal credit just based on where the rebate came from.
Exactly. Utility rebate reduces the base. State rebate generally doesn't. It's a key distinction.
What about state tax credits? Some states offer their own credits on top of the federal one.
Right. State tax credits don't directly reduce your federal tax credit amount. They're separate buckets. However, there can be a small sort of indirect effect. Claiming a state credit lowers your state tax bill. And since you might deduct state taxes paid on your federal return, paying less state tax could slightly increase your federal taxable income.
Ah, because the deduction is smaller?
Yeah, but honestly, with the current limits on state and local tax deductions, the SALT cap this effect, might be negligible for a lot of people. It's not usually a major factor.
Okay. And one more incentive type. What if you sell renewable energy certificates, RECs? Some systems let you do that.
Right. If you get paid for selling RECs generated by your system, that payment is generally considered taxable income by the IRS.
So you pay income tax on it?
Yes. But it doesn't reduce the amount of your federal solar investment tax credit. The credit is based on your upfront cost. The REC income is separate operational income later.
Got it. Okay, let's talk financing. Many people take out loans for solar. How does that work with the credit?
If you finance the system, say through the installer or a bank, and you're legally on the hook to repay the full cost.
Which you usually are with a loan.
Right. Then you can claim the federal tax credit based on that full system cost, even though you're paying it off over time.
Okay. But are there financing costs you can't include?
Yes, definitely. Things like the interest paid on the loan, any loan origination fees, or the cost of an extended warranty, those are not eligible expenses for calculating the solar tax credit.
So just the core system and installation cost, not the financing fees or extra.
Exactly. Keep those separate.
All right. Are there any other kind of important warnings or details people need to know? Caveats?
Yes, a few really crucial ones to remember. First, this credit is non-refundable,
Meaning?
meaning it can reduce your tax liability down to zero, but if the credit is more than what you owe in taxes, you don't get the difference back as a cash refund.
Okay. So it wipes out your tax bill but doesn't generate extra cash back.
Right. But the good news is, if you can't use the full credit amount in 1 year, you can carry the unused portion forward to reduce your taxes in future years.
Okay, so you don't lose it, you just carry it forward. That's important.
Very important. Also, we mentioned no dollar cap, but just to reiterate, it's only for new equipment or
Yeah.
equipment being used for the first time. No credit for buying used panels.
Right, new installations only. What about roofs? If you get those solar shingles that act as the roof and generate power.
That's a bit specific. A standard roof replacement doesn't count at all. But if you install solar tiles or shingles that are primarily there to generate electricity and also happen to serve as roofing,
Then maybe.
then the cost attributable to the solar electricity generation might qualify. You need to look closely at the product and maybe get guidance on how to allocate the costs. It's not the whole roof cost usually.
Okay, needs careful checking. Can this credit be used against the alternative minimum tax, the AMT?
Yes, it can. Good news there. It can offset either your regular income tax or the AMT.
Okay. And last one, buying a new construction home that already has solar installed by the builder.
Typically, yes, the homeowner can claim the credit. Usually you claim it in the year you move in. You just need to make sure the builder didn't already claim it somehow, and you'll need the builder to tell you what portion of the home's purchase price was allocated specifically to the solar system cost.
Right, you need that cost basis
Yes.
from the builder. Okay, wow, that covers a lot of ground on what it is and who qualifies. Let's switch to the practical side. How do you actually claim this thing on your taxes?
Okay, practical steps. First, and this is probably the most important advice, talk to a qualified tax professional,
Always good advice with taxes.
especially with credits. They can confirm your eligibility, make sure you've got the right costs included, and handle the forms correctly. But broadly speaking, you'll need to complete IRS Form 5695. It's called Residential Energy Credits.
Form 5695.
Yes, and you attach that completed form to your main federal tax return, which is usually Form 1040 or maybe 1040 SOs for seniors.
And where do people find that form and the instructions?
Easiest place is the source. The IRS website, irs.gov. Just search for Form 5695, and you'll find the form itself and the detailed instructions for filling it out line by line.
Okay, Form 5695 attached to your 1040, find it on irs.gov. Got it. What if listeners want to dig even deeper after this? Where should they look?
Yeah, there's some great resources.
Yeah.
The IRS website, beyond just the form, has the actual law. That's 26 U.S.C. Section 25D if you really want to get into the weeds.
And that's truly dedicated.
Yeah. They also have FAQs on energy credits that are pretty helpful. And for a broader look at all kinds of renewable energy incentives, not just federal, but state and local too, the database of state incentives for renewables and efficiency, known as DSIRE, is fantastic.
DSIR, how do you find that?
Their website is www.dsireusa.org, DSIREUSA.org. Really comprehensive.
Excellent. And we should probably mention, a lot of the background for today's chat came from resources developed by the Department of Energy's Solar Energy Technologies Office, right? SETO.
That's right. SETO does a lot of work to support solar R&D and deployment, basically trying to make solar more affordable and accessible. It's also worth noting, Related to that, the work of groups like Energy Sage, which the DOE has supported, their materials highlight how platforms that let you easily compare quotes from different installers can really help bring prices down through competition.
Right. Getting multiple quotes is always smart.
Definitely. The whole push is towards making solar cheaper so more people adopt it.
Okay, so let's try to wrap this up. If you had to boil it down, what's the main takeaway for our listeners about this federal solar tax credit?
I think the bottom line is this. The federal credit is a really powerful tool right now for homeowners to significantly cut the cost of installing solar. It leads to real savings on your electricity bills over the long run, plus, the environmental benefits. The key things are really understand if you're eligible based on those criteria we discussed and know exactly which costs you can include when you calculate that 30%.
And we absolutely encourage you to check out those resources, IRS, DIR, DOE, for the official details for your situation. And as we said, talk to a tax advisor and definitely get quotes from several reputable solar installers. Thinking about all the falling costs of solar tech, these significant tax benefits, it really makes you wonder if adoption keeps increasing like this, what kind of larger impacts could we see down the road on our whole energy grid, maybe even on individual energy independence?
Yeah.
Definitely something to think about. Thanks for exploring all this with us today.